The recent regulations imposed by government entities on cryptocurrencies have caused thousands of merchants related to these to take refuge in peer-to-peer platforms such as local bitcoins, since many of the exchange of purchases and sale are affected by the measures imposed. CoinDance shows a series of graphs showing the very significant increase of Bitcoin traders in local Bitcoin. But the increase in demand for Bitcoin in the peer-to-peer trading platform seems to be driven by recent development in the Chinese cryptography industry. In China, the trend shows that the volumes of cryptocurrencies increased considerably, and it should be noted that in countries like Canada, Chile, China, Colombia, Mexico, Norway, and Venezuela have also shown similar trends. But of all these markets, China and Mexico and Venezuela have a special meaning. Exchanges in China have recently frozen Bitcoin withdrawals from their platform while working on the implementation of a new AML system. In Venezuela, in the middle of the economic crisis, Bitcoin mining and exchange activities had been repressed, and Serve Bitcoin suspended its services after a partner linked to the banking withdrew support for the platform. And for its part, Mexico is preparing to face any executive order of US President Donald Trump. And President Trump has already hinted at a possible interruption of remittances along with the increase of import taxes between the US and Mexico. But while planning to pressure Mexico to share the cost of the controversial border between the two countries, Mexicans are prepared to face any eventuality by adopting Bitcoin as an alternative. And these developments show that no matter what governments say, Bitcoin cannot be completely eliminated from the equation. And without improvements with the regulations in sight for the immediate future, it is expected that the volume of trade of cryptocurrencies of local Bitcoin will increase further. And a difficult year for Bitcoin. Well, between a growing stigmatization and severe regulatory measures, 2015 was the most counterproductive period for the cryptocurrency and the one that has brought major legal obstacles to investors and exchange houses in the US. But with the case of Silk Road Steel, very recent to the conviction of Ross Ulbricht to life imprisonment, exploded another scandal that's plunged Bitcoin into the world of corruption. Anthony R. Murgio and Yuri Lebedev, executive of the defunct exchange's house coin of the exchange house Coin.mx, were arrested in July 21, 2015 for operating Bitcoin exchange services without a license under the name of a briefcase company. Benjamin Lawsky now works as a legal consultant for BitLicense. But this commotion, in conjunction with other legal movement, created the environment for the application of one of the most criticized Bitcoin regulatory measures in recent time, the BIT license. So Benjamin Lawsky, Superintendent of Fiscal Services of New York, conducted an investigation of more than 2 years in the cryptocurrency sector in order to create a legal mechanism that will protect clients' investment by applying a set of anti-money laundering regulations. The BIT license was a battle between regional power and exchange houses, which ceased operation in the state of New York due to conceptual and ethical disagreement, as well as high cost of the license. However, the BIT license became a phenomenon that sought to replicate itself in other states, achieving success only in New Hampshire and a resounding rejection in California. But to this day, the Bitcoin license continues to wake a vogue in the company commerce of cryptocurrencies of these two states. In New York, there are only 3 licensed change houses, a scenario that seriously affects the New York forecast of becoming a blockchain city after this regulation affected the development of fintech. Patrick Merck, lawyer and partner of the Bergkamp-Klein Center for the Internet and Society at Harvard University, spoke about the complicated regulatory issue and the disadvantages suffered by companies specialized in cryptocurrencies in New York in an interview with Reuters. So the Technological Financial Law initiative presented by the Ministry of Finance and Public Credit to the COFERMER for discussion in the Congress of the Union excluded the regulation of the institution dedicated to the purchase and sale of virtual assets, a name given to them which within the bill to cryptocurrencies. such as Bitcoins, and indicates that only operations or transactions carried out with this type of currency will be regulated. But Bitcoin is a digital currency whose value and quantity in the market are not regulated by any monetary authority of any country, but are controlled by an encryption process. And this digital currency can be used for the payment of physical goods and services in real life, as happens with traditional physical coins. But most regulations on transaction and Bitcoin operators conclude that this cryptocurrency doesn't have the character of a common currency, but rather behaves like a commodity or an asset whose behavior is similar to that of other commodities, such as gold or any other good. But cryptocurrencies are testing the financial regulations of many governments around the world, and even some central banks are experimenting with cryptocurrencies, such in the case of FedCoin, a currency project managed by the Federal Reserve of the United States, which will be convertible into dollar and will serve to make retail payments, according to the Bank of International Payments, the PIB. Bolivia, Ecuador, Bangladesh, and Kyrgyzstan are the only countries in the world where Bitcoin cryptocurrency is explicitly illegal.